How you guys doing? Hope you're doing fine. I hope you're doing wonderful. This is a market brief via only USD because I think the correlation is clear. And if we analyze the USD, we could analyze the market and precious metals. Okay, this chart is the daily time frame for DXY. I talked about it last video in detail. What's new here? The bearish harami is new. Usually this is a bearish candle that waits for confirmation, and also you have a lower high. Yet usually on Fridays a lot of short sellers cover their positions. They are terrified that they might lose their profits, so they do this number here. Then maybe on Monday they resume their positions, and the uptrend in DXY resumes. So I talked about this breakout of this bullish wedge, the 1, 2, 3. This is the big bullish wedge, the two small ones, the 1, 2, 3, and all this good stuff. So far here, it tells me that we might go down, but it's not a game changer. If it's not a short covering thing that I talked about, and also we might have a small bearish divergence. Yet usually these type of movements don't get terminated quickly, so we will see how far this will go in the daily time frame. Yet it's a bearish harami. Good deal. So this is the assumption I'm working with right now. We are in an extended flat 335 and Elliott wave, and I'm assuming a minimum target of 95. The 1-to-1 is 93.74, but I'm thinking more if it's an extended flat. So this is the daily time frame, and I talked about the stochastic and this negative divergence. Good deal. So the weekly time frame, a lot of bullishness. So that's why I'm very comfortable with the dollar, because the weekly time frame is extremely bullish comparing to short-term pullback that might take place in the daily time frame. So what do we see in the weekly time frame? I see a breakout of a beautiful bullish flag, the big one, bullish wedge, and a bull flag. And usually these type of patterns, you have 1-to-1, so you have a long way to go for this bull flag. Okay, see how beautiful it broke it, and it tested it and succeeded. Good deal. So this is the weekly time frame, and this is the bull flag I talked about, and this is another weekly time frame I talked about last video, and I still talk about it today. The bullish crossover that takes place in the 10-day moving average, 10-week moving average, and the 20-week moving average. In the past 3 years, it happened 1, 2, 3, 4 times. 100% of the times it went up on average 3.7. Let's call it 4%. Okay, so we just started this average right now. If history repeat itself in the weekly time frame, and this is the chart I talked about long before, and how these things mimic themselves. They have almost the same characteristics of bullish divergences in both the MACD and the stochastic, and you have double bullish crossovers, one and another one, two, higher high, higher low, and you have that one too. Now you have another bullish development, which is the crossover between the 10 and 20 period moving average, and as I talked earlier, that produces up moves. So in conclusion, this things might go to 95 based on extended flat, the assumption in Elliott wave, and also based on assumption that history repeat itself. This thing will go at least 4%, 3.7%, that bullish crossover. So I base my bullishness on history and chart analysis, and this is the only thing I can do in my life. I cannot know the future. I just use behavioral finance to predict the future. Please like if you like, subscribe, and remember that disco is forever.